And that means we are live here on YouTube, Tackle Trading's Halftime Report. We've got Coach Tim, Coach Matt, Coach Cody, and welcome out. Let's go ahead and get started. Matt, how you doing today?
Tim, doing really good. Excited to be here with the team.
Yeah, me too. Markets, they're down a little bit here and they're back and forth. You've got mixed action across the board, but they're only down a hair, Matt. Could be the start of a pullback, might just be another day in the market. Let's start with the S&P 500 and give me a technical read if you would.
Technically, we're just sending at resistance, Tim. It's a very similar analysis that we had yesterday as you're approaching that 2,900 level on the S&P. You're just a little overextended coming into that level, and because you're a little overextended with really no catalyst to kind of speak of until we start getting into excuse me, until tomorrow and the next day, it's just a slow day in the marketplace, and obviously an opportunity to lock in some profit on some of those trades at resistance.
Yeah, as we're heading into tomorrow, I mean, we've got different stuff. You've got stuff out of Europe, the ECB press conference, CPI out of the US, the FOMC minutes. I got to tell you, none of this stuff scares me, Matt. But economic data doesn't scare me lately either. There's not really a report that I'm like, oh, wow, I've got a hedge. What do you expect from the economics tomorrow?
I expect the ECB to go dovish. I expect Mario Draghi to indicate as very similar to what the IMF did today, Tim. The IMF came out today and downgraded global GDP growth to 3.3% versus the expectation of 3.5%. That's on the heels of two additional downgrades that the IMF has given the global marketplace over the course of the last 6 months since October of last year. So you're talking about a slowing global growth environment. We've talked about that in the halftime report quite a bit, and so I expect the ECB to kind of follow suit there. With lowering the expectation of GDP growth in the Eurozone. And if you remember, last time they met 6 weeks ago, Mario Draghi lowered that from 1.6% down to the expectation of 1.1%. I expect him to lower it even more, especially given the data that we've seen out of Germany and the data we've seen out of Italy and the more concerning data that we've seen out of the EU in general. And on top of that, you now are dealing with $12 billion in proposed tariffs going on the EU in response to kind of what the EU did with Airbus. So I expect Mario Draghi to recognize what the slowing growth argument coming out of the Eurozone. I expect him to be dovish in the face of that.
Trump's just picking new fights all the time. Obviously, it did not surprise anybody when he came out and proposed $11 billion in new tariffs on the European Union. It impacted a few different people, specifically Boeing again. A lot of that is the fight between Boeing and the rival Airbus. BA is down here today as well. When you see that from Trump and these trade wars and tariffs and whatnot, just par for the course at this point, right?
I think so. I don't believe that's why the market's down today. I mean, I know that was the headline, right? But the $11-12 billion in tariffs proposed, I mean, that's really nothing. It's not that big of a deal, to be perfectly honest with you. It was really kind of in response to what the EU did with Airbus and the subsidies that the EU has given Airbus. And so it was kind of a retaliation against that. And the EU has threatened to retaliate against Boeing. And obviously, with all the news coming out there with Boeing lately, Boeing took it on the chin a little bit today.
One of the biggest companies down today is United Armour, or Under Armour, I should say, UA, Matt, if you'll bring that one up. Beyonce announced some deal with Adidas, and they're citing that as one of the reasons why this is selling. Beyonce didn't go with Under Armour, I guess, went with Adidas, and now it's down. We've had pressure in some of these retail names. We've had strength in some of the retail names. That's not a good looking chart, but until you break below support, probably neutral until you get triggered.
Yeah, I would say you're neutral. I mean, I could understand somebody triggering under 19 here. You do have lower highs and lower lows in the short-term trend. As you can see, resistance kind of established right here, double top, double bottom, established a lower level of resistance right here at 20, and then you break here at 19, which was an old support level here. So I could understand a trigger under 19, but if you're not in it at this point, you got to wait till you break these support levels right around 1830.
Yeah. And, one of the areas of the market that's down today is casinos. And part of that is just Wynn Casino announced a merger. They were buying out with $10 billion Australia's Crown Resorts. We've liked Wynn's action lately. Whenever a company comes out and spends $10 billion, usually you're going to have a price correction in some regard. It's only down a few percent, but that does change the pattern a little bit here.
It absolutely does, no doubt about that. But I don't think it's a merger yet. I think it's just a proposed merger, and I think it's a 50-50 cash versus Win shares. And it does look like that merger is going to happen, though. And if you're looking at getting in Win, I mean, this is kind of what you want to see here, Tim. You're not looking to get into Win at this point above 140 when it's so far overextended in front of an earnings report. You're going to wait till after the earnings report, and maybe you get that dip back down in price to around 130. So you want to see a pullback if you're looking to get into Win. I don't see this merger as a bad thing for Win, to be honest with you.
No, I don't necessarily see it as well, but it did carry some pressure on MGM. MGM also is down today and actually a much more bearish pattern. Win looks a lot stronger. MGM looks quite weak as we're heading into earnings here in a couple of weeks.
Yeah, I don't see a trigger here until it gets under 26.
I'll tell you where another trigger is on a stock is below $9 on GE. If it does happen, bring that stock up. After the gap down, a lot of companies fell back on the gap. This one did not. Everybody knows my opinion on GE, so I'll let you do the analysis here. But obviously, it's down 3%, pressing on support at $9. A break below 9 is tradable.
Absolutely, 100%.
Yeah,
100%. And Tim, you've been very outspoken with GE from a fundamental perspective, and it's something I absolutely 100% agree with. You're looking at a company that is not a fundamentally strong company. You're looking at a company that if it does break down $9, remember some of those banks have price targets on GE at $5 and $6 here.
mm-hmm.
That would be a very, very significant break of support at $9 in my opinion, and would confirm a short-term bearish downtrend. And does a short-term bearish trade as well.
Mm-hmm. You know, a couple of companies that are very tradable that we watch all the time, Micron and AMD, they're both down today. Chip makers are down. I did read a report out of China that they were going to regulate, Bitcoin mining. They actually want to restrict it and kind of reset it in the country. I thought that was interesting. Obviously, that can impact chip makers in some regards, different companies, different components.
Before we talk about AMD, let's talk about Bitcoin on that one, though, because that was major news, Tim.
Yeah.
I mean, that was major news. And in the last 2 years, when you've seen this news coming out of South Korea or you've seen this news coming out of China, you've seen massive volatility coming out of Bitcoin. And when I saw that news this morning, before I even looked at Bitcoin, I assumed Bitcoin would be down. And I assumed it would be down pretty significantly. And what Bitcoin do? It's actually up $15 on the day.
Holding up.
I mean, that is a positive sign. And that's my entire philosophy right now regarding what happened today is Bitcoin should be down. It's not. That's a positive sign.
Yeah, I agree with that. Micron wasn't down too much. AMD, though, is now developing into a nice pullback. If you miss the breakout, this is the kind of thing as a technician you love seeing. You like seeing the up and down, the pay range up and then the retracement, the pay range up and then retracement. It's not a great candle for a trigger, Matt. Might be setting up for later in the week or even early next week. But
big red candle means momentum to the downside, right? Yeah. You're never going to look to trigger on a big red momentum to the downside. You're going to wait for it to slow down, and a lot of times that 20-day moving average catches up to it. I'm looking at a potential, $27 support level right here in that 26.75 to 27. Keep an eye on that level for AMD. If we can get some slowing down at that level, followed by an upward movement in price, even before this earnings date coming out on the 24th, you should have a little bit of time if it happens in the next 2 or 3 days to make a swing trade in that environment. But it has to slow down first. You never want to jump the gun here. You never want to be the first one. You never want to pick the bottom of something. You want to let it slow down here, upward movement in price, and that's when you get into it.
Yeah, move on to the Dow Jones Industrial, if you would. Let's talk about the YM contract. I always start with the S&P, then the Dow, then the NASDAQ, and the Russell. We do it every day the same way for a reason here, Matt. 3 little red candles here pulling back. Obviously, old resistance. It's a complex technical pattern in some ways, but it's pretty simple in others. You've got slowing momentum in an uptrend. You're still above moving averages. You've even got a tail on that candle, which means buyers are coming in and holding the price a little bit. What's your read on the Dow?
You're absolutely right, Tim. You got slowing momentum and trend. You did just break out that 2600 level, and you're established a new resistance level at 26,500. You're retracing back down into a support level, and as a buyer, if you're looking to get back in, it's important to hold this level right here between 2,600 and 26,200. That is important to hold this zone of support. If you get back under that 2,600, it's a different analysis. But as long as we hold that zone between 2,600 and 26,200, excuse me, 26,000 and 26,200, you're perfectly fine. You're still bullish there, even in the face of slowing momentum.
You know, a couple companies catching my eye here on the Dow. Number one would be Home Depot here, Matt. Home Depot is a company that we were long, and we had on the option report 2 weeks ago on the breakout. And now you're up here on a red doji going into some economic data. It begs the question, are you now at profit taking point?
At a minimum, you're at the let me aggressively trail the stop loss up under, maybe you trail it up right underneath that $200, price point here. You've had good momentum coming into Home Depot. You've set in a new height there at about 204. You are consolidating over the last 2 to 3 days. And if you drop this down into that 30-minute chart, you can kind of see that consolidation happen. You got a short-term intraday support level at 201.25 that you can trail a stop loss under. But if you are going to adjust that stop loss and not simply lock in profit because of what you're seeing on the intraday, I would have to start that at that $200 mark, giving it a little bit of room for Home Depot to continue to run. It's been an absolute juggernaut here. It's held your intraday support levels for the last 2 weeks. If you break this intraday support level and then ultimately come underneath 200, yeah, I think at that point you just say, okay, I made some money. I'm good to go on that one. Nothing to see here. Live to fight another day. But I would have no problem with somebody saying, you know what, we got some major news tomorrow. We got major news on Thursday, and we got major news coming out on Friday. And the market's overextended at resistance at 2,900. Home Depot's overextended in any scenario possible, with the market being overextended, with Home Depot being overextended, and in the face of tomorrow ECB and the FOMC meeting minutes. Yeah. And the CPI report. Yeah, I would have no problem with people locking in profit here.
Obligatory conversation about Boeing here today. Down again. Obviously, factory orders on the 737 MAX have been slow and low, and they went down this quarter, and they were reporting some of that. And there's more news, around Boeing this week. But you've got 360 support, Matt. You've got earnings coming up. Is there anything? I know we've got to stay away. I mean, basically, our call is stay away until we get more clarity. But if a trader wanted to go short below this 360 level, I mean, would you fault them on that?
No, I wouldn't fault them on that. I mean, every trader is going to do what a trader wants to do. And if a trader wants to take, the risk of the uncertainty in the news cycle to go short under 360 or to buy above 400, that's up to the trader. That's not something I would recommend. And that's certainly not something I would do.
Yeah, it's kind of neutral range bound at this point. You've got a clear support at 360, clear resistance.
Honestly, Tim, it's not even about the technicals for me on Boeing. It has nothing to do with the 400 or the 360 support level. It's the uncertainty surrounding Boeing. And I do believe we have to allow the uncertainty to come to a clarity before we start, doing anything on Boeing. And it has nothing to do with their earnings report coming up here either. We need to see clarity coming out of that MCAS software solution. We need to see clarity on their factory orders. I know Delta's CEO came out today and said they're confident that they're going to be flying the 737 Supermax this year. Well, that's fine, Delta. That's amazing. Good for you, Delta. But Delta, that's not your call. And that's not Boeing's call either. This is out of the hands of Delta. This is out of the hands of American Airlines. This is out of the hands of Boeing. And this is going to be a regulatory issue. And so we need to see some certainty there first.
Yeah. Another company grabbing my eye on the Dow is Nike. I think this pattern is really turning over here, Matt. And if the market ever did go into pressure, I mean, this is the kind of thing where you've got a breakdown on earnings and then a backfill and then a pivot and then a trigger. You take screenshots of that and put it into blogs and books for a reason. I mean, that's a good pattern for a reversal right there.
Trigger under 84.
Yeah.
And it's a company I really, really like in Nike. But as a technician, as a trader, I mean, that's a reversal pattern. What you're seeing a negative reaction to the earnings report. You're seeing a gap fill after the earnings report. You're seeing a slowing momentum at the gap fill, and now you're seeing confirmation of moving averages starting to turn over. If you break that 84 mark, yeah, you're going down to 82, 81. If you break that, you're going down to 80, and if you break 80, well, it gets ugly under 80.
You know, the number one leader on the Dow today is Disney. Disney came out and they had an upgraded price target, I believe. Credit Suisse, I believe, one of their analysts that ranks them, just sees really good earnings coming down the pipeline. This is a good looking chart.
Goldman upgraded last week. I believe their price target at Goldman was 142 or 144. I can't remember exactly what the price target on Goldman was. And I don't know what the price target at Credit Suisse was. I did see the upgrade, but I didn't see exactly what their price target was. I don't care what their price target is, to be perfectly honest with you. I said this a couple weeks ago. I said it last week. I'll say it again. I love the acquisition of Fox
Yeah.
for Disney. I absolutely love the acquisition of Fox for Disney. That allows Disney so much latitude with where they want to go with their media and their digital media and their content and everything else that Disney does control. And so I absolutely agree with Goldman Sachs upgraded target. I agree with Credit Suisse upgrading their target as well. That is a breakout, is what you're seeing on 116. Now, I'm not going to touch it above 116 because that does not fit my personal trading style in terms of buying breakouts after a stock has been overextended. But what I do like in these types of patterns is the retest of that breakout point. So whether you set up a new resistance and slow down at 118 or 120, I really could care less about that. What I'm looking for is that next trigger. And that next trigger is either going to be a high base type situation, allowing the market to kind of cool down a little bit, or it's going to form a little bit of a retracement, come down and retest that breakout channel there at 116. So that's what I'm looking for. And I think everybody should have Disney on their watch list.
One last Dow company is Apple Computer, and don't look now, Matt, but they're going back to $1 trillion. It looks like they've just been a juggernaut
What
since
was
they.
their trillion? 220
I think
two,
it's about
or is it
220.
2? It might be 206.
They're
I'd
close.
have to do the math on it, but
Market cap right now is 937 billion. So they're going to need to add another 60 billion off 930. I'm gonna have to do some math as well. Maybe more.
10 days in a row, bro.
Yeah, it's been a
10
juggernaut.
days in a row. And what did we say yesterday? When you're making a decision based on hitting that first target, you got to make that decision based on momentum. And you had a lot of momentum coming into Apple yesterday, and you have a lot of continuation here today. And I love this type of setup here now because you can now start aggressively trailing up that stop loss. Once you're above that 200 level, you can trail that stop loss underneath the low of today. You can trail it underneath that $200 mark. It gives you a lot of latitude in terms of what you want to do with adjusting that stop loss. It would start for me with adjusting the stop loss right underneath 200. You got that secondary target at 206 to 207, and it does look like Apple certainly wants to get there. I mean, at this point with Apple, it's like, why don't you just go up and reclaim the all-time high? Just do it right
Feels
now.
like it
Just do it
wants it.
right now. Right?
Yeah.
It does. And Tim, usually when we say that we have a feeling, it's because the entire market has that feeling, right? The entire market has that feeling that Apple just wants to be that juggernaut again. And Apple is at right now being that juggernaut again. And if it wasn't for Apple and Disney, the Dow would be taking on the gin a lot more today, given what Boeing did yesterday and today.
Yeah, I would agree with that.
And let me answer a couple questions from Linda and Ellen. First of all, Ellen, would you add a stop loss if you're holding long term? No, I personally wouldn't. If I'm holding long term, Ellen, there's nothing in the short term analysis that would lead me to, want to adjust a stop loss long term. From a long term perspective, I don't use stop losses. I just don't. And the reason being is if I ever get concerned, Alan, about the long term holding, and this has nothing really to do with Apple, it has to do with everything else. If I'm concerned about long-term valuation, or if I'm concerned about, short-term volatility, instead of adjusting a stop loss or adding a stop loss, what I would do is add a put option to that long-term holding to protect it to the downside. Once you get out of a long-term holding, you have no ability to rent that stock out, which means you have no ability to cash flow on that stock, which means you have no ability to compound those gains. And you're also not going to be capturing a dividend on a company that has, even after the snapback rally Apple's had in the last 3 months, Apple's PE ratio, and I don't know it off the top of my head, Tim, but I think it's like 16.
Yeah, it's pretty cheap.
It's a very, very, very cheap valuation.
You do know it off the top of your head. It's 16.
Okay. I knew it yesterday. I didn't know exactly what it was today. The P ratio does change based on the price, but it's about 16. So it's got a really, really good valuation. It's a great company. I mean, this is a company that sold $84 billion in sales last quarter alone. And that was a 10% downgrade versus what they offered. So no, I would not add a stop loss to a long-term holding. I like what Coach Noah said. You add once you do that, once you capitulate on a long-term holding, you can't do covered calls on it. So instead of adding that stop loss, add protected put options. And quite frankly, on Apple, there is absolutely zero reason right now to add a protected put option right now. When it gets overextended, rent it out. And to answer Linda's question in terms of is it too late to add shares to Apple, it really depends on what you're adding the shares for. If you're adding the shares to a long-term holding, this is, yeah, you're looking at a breakout at 200. You like the breakout at 200. That is a reason to add to those shares above 200. If you're looking at it from a short-term trading perspective, is that the question is this, and I'm going to throw it to you, Tim. Is this a new trigger for a swing trade in Apple, for example?
Well, the NASDAQ and the market is bullish. You could buy Apple. Absolutely. It's not a swing trade trigger. No, the answer for me is no. You missed it by 2 days. I think that you have to play that
breakout of 198.
I agree.
Yeah, the breakout.
So I understand 200 is around psychological level, and after it's a momentum trigger. If you want to map out a position trade trigger for me here, I could 100%.
Okay, let me map one out. Okay.
Yep.
So if we're going to map one out here, let's drop this down into an intraday level. I'm looking at the 30-minute chart here. So if you want to map something out from an intraday perspective, buying the breakout intraday of 202.85, putting a stop loss 10% of the ATR underneath 200, and basically you just you buy the breakout with a very tight stop under 200. You're taking about $3 of risk for about, if your target's 207, 206, 207, you're talking about a $3 return for a $3 risk. I don't know. I don't know if you can do it. I mean, and that's predicated on the fact that your target would be into this range right here, the 206 to 207 level. I don't know if you got the reward to risk ratio to justify a momentum trade here.
Yeah, I think that it might be tough on. I mean, we're up 10 days in a row, Matt. And I know that that's a strong momentum play. Full disclosure, I own Apple and I'm not selling it, because I see the momentum and I think it's going to continue to run and rise. So I'm bullish on the stock. Don't get me wrong. And I see strength here. I love the company.
Well, there's a difference between if you're into the stock right now versus making a decision to get into the stock right now. If you bought this retracement, which was all over the scouting reports, by the way, if you bought this retracement at any point in this 4 or 5 days, yeah, you're celebrating right now. You're not locking in profit. You're adjusting a stop loss under 200. If you're looking to get in, you just don't have the reward to risk ratio necessary.
6 is giving you a big shout out here, Matt.
6. I seem to know a ton about America. Well, I do live in America, so I would hope I would know a lot about America.
Not everybody who lives in America knows a ton about America, I got to tell you. So,
well, first and foremost, America doesn't own capitalism. That's first and foremost.
Yeah. Move on to the NASDAQ.
I don't know if I have a soapbox in me today.
Yeah, you don't need one. You don't need one. You're doing fine. NASDAQ, first of all, soapbox is for special days, right? You bring the soapbox out.
No. Soapbox. I mean, you don't plan a soapbox.
That's true.
It's natural. It just happens. Somebody says something, somebody does something, you read something in the news, and it's like, what?
I know what I'm going to buy you for your next birthday. I'm going to buy you an old soapbox. I'm going to find you from one of those antique stores or something. Get it. Yeah, absolutely. I'm going to find you an old soapbox.
The one thing I will say is I get very saddened the anger towards capitalism, because I think it's misplaced. And I think it's misplaced because we don't live in capitalism. And that's my entire argument, is we should go back to capitalism. We live in a version of capitalism. And I do believe there is socialism in America. And I believe socialism in America is more for corporations right now than anybody else. That's not capitalism. So,
yeah. NASDAQ 100, if you would, we're going to talk about some of the major components. We already looked at Apple, who's showing me a lot of strength here today. The NQ has been my top rated one. It's 76.15. We have the high at 77.28. It's about another 100 and so points, 1.5%. We could hit that on any day here. Matt, it feels destined to clip that all-time high. But we are range up. What's your read here?
Yeah, you're range up, but you're not overextended, right? You are range up, but you're not overextended. In overextended, if you're looking at overextended, that's kind of this movement here. And if you compare this movement from 7,000 up to the top right around 75.40, you're talking really about a 540 point range versus down here at 72.80 up to 76.50. You still have range to move in this short-term movement. You are a little range up just given the fact that you're coming into some very, 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 very important levels of resistance that we talked about yesterday. It just feels like it wants it, Tim. It just feels like the market wants that headline. It wants the headline of all-time high. Mm-hmm. That's what it wants, right? And so it wouldn't surprise me if we do ding that later on this week. A little bit of slowing down here. We talked about the intraday levels of resistance yesterday, and you have fairly clear levels of resistance. If you can break here at 76.20 on the intraday, you should get up here to 76.30, and if you break 76.30, it's off to the races at that point. Keep an eye on those levels from an intraday perspective, however.
You know, a couple of tech names that are grabbing my attention here. Facebook is number one. Facebook actually had a report come out saying, and you know, they looked at Zach's analyst looked at them. There's a bunch of different analysts that looked at them and said, hey, the Instagram revenue is just so strong, and Instagram growth is still so strong.
I'll continue.
Could you still be willing to look at Facebook with potential bullishness based on the idea that Instagram is good enough to hold them up, even though the other components you don't like personally?
In our prediction podcast for 2019, one of my crazy random predictions was Facebook rolls out Instagram for their own IPO and their own stock, and they break away in that capacity. I would love that because I like Instagram. I hate Facebook. Mm-hmm. But yeah, I mean, is this a trigger? Yeah, it's a trigger.
Yeah. A couple other companies while we're looking at companies. Give me X if you would. X was downgraded today, and they're down about, pretty healthy, 8% or so, Matt. You know, this is a company that we watch, that we talk about, that we trade. It's on, I believe, almost every one of our coaches' watch list as well. Yep. It's not a good look.
No, it's not a good look. Got a downgrade today. They don't know what they're doing. It got a downgrade based on the competitive environment regarding United States steel corporations versus the global steel corporations. And I understand that U.S. steel is a little bit more expensive than global steel. I get it. This is a company that I really enjoy trading. And I enjoy trading it for cover call reasons and specifically cover call reasons alone. But if you're going to trade U.S. steel, you have to understand one thing. There are many times you need to add put options to it. There are many times that you need to collar that trade because U.S. Steel has this ability in it, Tim. And if you look at this over the course of the last 4 years, what happened today is nothing compared to what it typically does. This is what it typically does. I mean, you're talking about a stock that will go from 15 to 40 within a 3-month time frame, come back down to 20, back up to 45, back down to 20. This is what the personality of this company is. And if you can't handle this type of volatility, then you should not trade U.S. Steel, not even for cash flow reasons, because a lot of times the most difficult decision that you have is when to collar that trade. And on earnings, it's easy to collar it, but there's other times that you have to collar that trade when it breaks support levels. When it breaks support levels, you got to collar that trade as well. So obviously negative news on today caught a lot of people, including myself, upside down on U.S. Steel, but it's how you respond to it. So how do you respond? You buy back the call options you've sold at pennies on the dollar. You reissue call options and you add a put option with them.
Yeah, absolutely. And if you were not in a position coming into today, Matt, there could be a viable argument that, hey, sell a naked put where you're willing to own it. If you were looking to initiate a boomerang trade, at like 17, 16, or 15, there's credit down there, by the way.
Okay, if we're looking at that from a boomerang trade perspective, and for those of you who are not familiar with the boomerang trade, it's the naked put to cover call, naked put to cover call, naked put to cover call. And yes, Maria, trading U.S. Steel is like trading Tesla sometimes. Lots of ups and lots of downs. There's no doubt about that. But when you're looking at in the boomerang trade, Tim, the naked put does not start with what delta you're selling in the boomerang trade. In the boomerang trade, it starts with identifying a level on that stock, a support level on that stock that you wouldn't mind owning U.S. Steel or AMD or whatever you're looking at, Okay. You
Mhm.
make a decision to say, okay, I want to add this to my portfolio for covered call reasons, and you issue a naked put where you want to buy it at. Now, if you're looking at that and you say, okay, we got some pretty decent evidence right here at about 17 to 17 and a half. You also have some real good evidence over here at about $16 as well. So there I come and I say, okay, let me look at those put options here. And I'm going to go down to just my standard option Greeks here. So at 17, if I wanted to take possession at 17, okay, I sell a $17 put option, one contract. We're receiving $72 in cash flow. We have to put up $252 in buying power. That's a really good return on investment for a naked put. If it goes down to 17 at that point, you are going to take possession at 17. Now, where's the risk on this? The risk on this is, as Nicholas points out, U.S. Steel is pretty bipolar. Yes, it is 100%. This is the personality of this stock. So what's the risk you're taking? The risk you're taking is not taking you taking possession at 17, but it really going down all the way down to 15 and you still taking possession at 17. That's the risk you have on it. But it's a wonderful trade to get into something that you want to own long-term in your portfolio, but you also have the expectation of doing covered calls on it. And like I said, I love doing covered calls and naked puts on U.S. Steel. The premiums are just so juicy, and it's a company that I actually like. But you need to have the skill set of a trader if you're going to do that. And the difference between the skill set of a trader and the skill set of just an investor doing covered calls is the investor doing covered calls, they'll do it on like GE. I mean, just let me capture a dividend, doesn't move that much. And GE was a terrible example, but you get my point. They do it on something that is a dividend paying, doesn't move very much. U.S. Steel, you're going to get 3.5%, 4% on a covered call on that. You're not going to get that out of Apple, right? That's and to go on Nicholas, that's why you're getting 3.5%, 4% on a covered call, is because of the volatility of United States Steel versus the volatility of, say, Boston Science or some other Tackle 25 stock. The reason we removed U.S. Steel from the Tackle 25 was because of the volatility problems that a lot of new traders have with doing covered calls on a stock like U.S. Steel or AMD or whatever it is, stocks that are really, really juicy premiums, but you need a little bit more of an advanced trader skill set by from a technical perspective. When do you want to issue those call options? When do you manage those call options? How do you buy back those call options? And when do you add the call to color the trade? So we removed U.S. Steel. We put it on Dirty Sexy Money for a reason. Dirty Sexy Money is, you can get juicy premiums, but you got to have the skill set of a trader to manage those positions.
That's right. That's right. Other companies grabbing my eye here today on the NASDAQ. American Airlines had a downward guidance of their revenue, Matt. Winter is coming. It's going to happen over and over and over again. I think that this is going to be a theme for this quarter. Downwardly revising, downward guiding, all that kind of stuff. AAL now on a pivot point, actually down today. It's showing some resiliency in the candle, quite frankly, but not good news for the company.
No. And I think that's the theme you're going to see over the course of the next 3-4 weeks, Tim.
Yeah. Alibaba is impressing me up near resistance, about to break out. Keep an eye on that. If you're a large cap Chinese tech, fan, it is one of the biggest, if not the biggest one out there, and about to break out of that 190 level, Matt. This company was on our Tackle 25 for years and years and years. What's your read here on Baba?
You got to love a potential breakout here. The only question is, where do you put that trigger? Do you put it above 188, which is the old tick right here, about 188, 187 and a half? I'd say 188. The only question is, do you want to be aggressive above 188 or do you want to be conservative above 190? That's literally the only question I have on Bob. The target would obviously have to be 200.
High growth, very aggressive company, but one of my favorite names in the company or in the market. Give me MDB, MongoDB, MDB. They actually just announced a cloud agreement with Google. Matt, gapped out on earnings, ran, pulled back, pivot. Now a little green candle. I like the pattern, and I like the company right now. It's a growth company. It's an aggressive company. In fact, I think the size of it, $7 billion. So you're talking mid cap.
Yeah. Again, love the retracement here. The only question you really have is trigger. I think the trigger has to start with your conversation at 140.
That's right. Move on to the RTY if you would. Quick peek at the small caps. And we're hitting our head, Matt. Until resistance is broken, resistance is there. 1600 will always be the number that we're going to be paying attention to on a day by day basis. Any other read on the small caps here aside from the other markets?
No, I get so bored reading the Russell 2000 these days.
Kind of not doing much. Let's move on to the dollar, if you would. Now, the dollar has FOMC minutes tomorrow, and the number one currency in the world is the US dollar, but the number two currency in the world is the euro, Matt. And they have the ECB report tomorrow, and Mario Draghi is going to come out and make their monetary policy statement. As you see the dollar hitting its head in this fading casual uptrend heading into those events, what's your take?
There's not going to be a swing trade here on the dollar. The only trade you got on the dollar over the next 3 days is day trading day trading economic reports in the ECB. That's all you got.
Mm-hmm. Yeah, I would agree with that. And as the dollar is fading here, we're seeing some action across energy and whatnot. Crude oil now is probably at a profit-taking point if you're a swing trader. Some people would approach it that way. You've got the inventories numbers on Wednesdays that do play into it. I know they're not as important as they were in the past, but you now got a red candle, couple of days up, pretty much pay range up. What's your read on crude?
Oh yeah, that's my read, Tim. Pay range up. I'd be locking in profit ahead of the EIA numbers.
Yeah, metals markets, gold is running neutral in a long-term range. We've analyzed gold quite a bit, talked about it on the podcast as well. By the way, if you are a podcast fan, you got to listen to last night's podcast. Just incredible.
It's definitely download and listen to that podcast that we released last night. I had an amazing real estate investor by the name of Brandon Diaz. I've known Brandon for a few years now, and I just love Brandon. I love everything about Brandon. I love his mindset. I love his story. I love kind of how he came through all the adversity that was put in front of him, from going from a broke ass, college student, from going from a D- high school student to 4 year in the Marines to can't get a job after he got out of the Corps to living in his mom's house for the next 2 years, being a broke ass college student, to eventually going to a seminar one day, learning how to invest in real estate. And then 10 years later, this is an amazing real estate investor. Definitely download and listen to that. I think everybody will learn from his story, number one, but also we talked about kind of what his focus is in real estate in terms of zero money down transactions, long-term holdings. And we did a special edition of the Coach's Mailbag with Brandon on real estate. And then at the end of that podcast, we had some fun, didn't we, Tim? We did a little about 30-minute conversation on who lives and who dies in Game of Thrones season 8. So if you are a Game of Thrones fan, definitely rip on our predictions because most likely they're wrong.
Oh, I know mine are wrong.
Well, I'll tell you, Tim, here's what I tried to do. I tried to analyze it the same way I would analyze a stock. Like I really gave it a lot of thought.
I didn't.
And no, you didn't. No. Tim's prediction is really simple, guys. Everybody dies and the Ice King wins. Okay, that's Tim's prediction. Oh wait, no. A couple other people live that don't make any sense if the Ice King wins. But I tried to analyze it like I would analyze the stock based on return versus risk versus probability. So definitely, if you like Game of Thrones, you guys will enjoy that last 30 minutes of the podcast. But I'll tell you guys, we had an epic podcast. It's a 2 hour and 50-minute banger out there. So enjoy it.
Yeah, for sure. There's no doubt about it. Do have to look at Bitcoin real quick, if you would. We were talking about it before. China came out and said that they were going to restrict Bitcoin mining. And, they did this with the internet as well, Matt. They came out and kind of reset the internet so they could regulate it. And some people are speculating maybe they just want to regulate whatever the crypto markets are going to be. You know how China is. But you had a good point. You thought it was going to be down big. It was not. It held up pretty well.
Well, it played defense.
Yeah.
And you've heard me talk about this. In the face of negativity or in the face of, complacency, when the market plays defense, it shows you something positive. And, we've talked about when the market breaks out of resistance point and then it plays defense for 2 to 3 days, kind of hugging that breakout point. When you're looking at it from, take Facebook, for example, right? Facebook breaks out, struggles on the breakout, but plays defense against the breakout channel and then upward moving in price. you got to like that positive type defense when you're looking at that from a breakout standpoint. When you're looking at Bitcoin and you say, okay, Bitcoin just broke out, it's overextended in the short term, and anybody's evaluation is overextended in the short term. And in the face of negative news, when you have something overextended in the short term and you have negative news, a lot of times that just gives everybody reason to hit the sell button. That's what it gives. You're overextended, you're looking for a reason to lock in profit, and you get the negative news and you're like, wow, it played defense. It didn't sell. Traders didn't lock in profit. I think that is a positive thing for Bitcoin. When you're looking at this from an intraday perspective and you break this down into a 30-minute chart, you see the slowing down that it's had. You see the defense that it's had. You have very clear intraday support levels at 51.35, and you have a very, very clear new trigger if you want to buy a breakout above 53.70, which would also get it above its 200-day moving average as well.
Just saw a headline come through here, Matt. The IMF cut their global growth forecast and said that global leaders are going to have to coordinate stimulus plans if the economies can continue to slow in Europe.
Makes me disgusted. But yeah, IMF got it from 3.5 to 3.3%. So if the global growth is only going to grow at 3.3%, we need every central bank and government in the world to coordinate stimulus packages and quantitative easing programs, because we're only going to grow at 3.3%. It's a joke. It's an absolute joke what the banks and the governments have done to capitalism. It is absolutely a joke.
I agree. But you know what? They're going to continue, Matt. And we are the CEO of our life, and you're the CEO of Tackle Trading. We can only control what we can control, right?
That's right. We don't care. We care about us. We care about our community.
That's all we can do. I mean, they're going to continue to print us into the moon. We have to come up with a solution, which is where hedging and those kind of things.
If they're going to continue to print us into the moon, we're going to buy some equity along the way to offset inflation.
That's right. All right. Today is Delta Tuesday here, guys. One thing we want to do today was to prep a short trade, even though the market's been bullish. We haven't done a short trade in quite some time, Matt. New members of our community could probably learn from just, the basic prep of stop, entry, target, and so on and so forth. We had a couple of candidates. I like a lot of them off the option report this week. The one that grabbed my eye the most probably is CME. For me personally, it's not triggered yet, which is, I guess, some of the complexity. You had a couple you liked as well. Which one you want to go with?
I don't mind the CME trade here. You do have a little bit of a double bottom here, a little bit of a deeper retracement. You would have loved to see that kind of form around 170 personally. So if you're looking at a potential trigger, drop that down into an intraday, and you have fairly clear levels of intraday support right around 170. You got a really good one around 168 though. So again, it's just really kind of updating those triggers of where you wanted to get in. I got a couple others here though. One was STT. This is State Street Corporation. I like kind of what I'm seeing here in this short-term trend where you have lower lows, lower highs, lower lows, lower highs. You got a fairly consistent price action as well when you're talking about the lower low, lower highs from 73 down to around 60, we'll call it 68, $5 price movement, around 71 down to 65, about a $6 price movement. So you have a very consistent short-term trend. You also have a fairly consistent trend line that it's coming into as well when you kind of connect the dots right there. And that's just, drawing trend lines is kind of art, kind of science, a little bit of the same. But in terms of that, you got a good trend line coming into that trend line. The only question is, where would you put that trigger? And if you're looking at that from a 30-minute chart perspective, trying to identify where you put those triggers, I think you got a trigger underneath $68.
Mm-hmm. Mm-hmm. We bird dog this stuff all weekend long. Obviously, we have that long report. We have all the coaches come together. So if you're a pro member at Tackle Trading, a lot of these companies are already going to be on your sheet. I was mentoring a couple people over the weekend, Matt, and what really struck me is one of them had not been very active. The other one was very, very active for their first year of education. All that kind of stuff was just dialed in, and both had great attitudes. Both learned a lot. It was fantastic. But even the basics of an order, when you haven't been trained on it, a lot of people struggle with that stuff, like setting up a stop with a target contingent or an OCO bracket or something like that. How do you recommend new students learn Thinkorswim or their broker software to best apply the bird dogging we do?
We have, I think, around 1,300 videos in our YouTube channel alone, and many of those are on Thinkorswim and order entry, and we do that in the scatter reports all the time as well. An OCO bracket order is a very simple order, right?
Mhm.
It's you're identifying your entry, you're identifying your stop, and you're identifying your target in that order. And then what you want to do is you simply want to right click, sell custom, OCO bracket, and then you simply fill out your order with where you want to trigger into that. In terms of learning order entry and whatnot, it does take some time, but again, you got 30 different picks every single week that you can go practice all those things on. You need to put some practice in. You need to put some time in. An OCO bracket order is simply an order that allows you to put all three orders into the same transaction.
Yeah, I agree. In fact, I asked a question the other day in our clubhouse, what's your number one financial goal for 2019 in the second quarter? Updated it for now. We're in April. And one of our new students said, I just want to make 2 trades a day in paper trading. And I thought that was a great goal. If you're new, just get in there and practice. You have paper trading for a reason. Take the candidates and go through the watch list, make your own analysis, make your own picks from those lists, but just put the trades into your paper account so you can learn and go through the
Well,
tutorials.
we're putting together a new system called the STEP system for our scanner reports. We'll be releasing that system sometime in May, whether that's the second or third week of May. We don't know exactly when we're going to release that, but I'm very excited for that system. It's going to teach people exactly how to use our scanner reports and order entry and all that. Yes, it will be a premium system for everybody, but it's going to be a great system. I'm excited to release it.
Reminder, last stock I want to look at here today is Delta Airlines. Delta Airlines has earnings in the morning, Matt. In fact, before market open, if you hold or trade or own shares of Delta, be aware of the earnings. Always take a look at that before you trade. DAL. It's going to be interesting. Earnings season kicking off later in the week. We've got all the financial companies. We'll be talking about it day by day as we go. Coach's show tonight. I did see Mark on the coaches show tonight is going to be preparing and kind of planning on how to look at the earnings season for this quarter. So make sure that you attend that, guys. Any last calls to action here, Matt?
No, coach's show tonight. We got Bear Market Survival Guide Mastermind Group tomorrow night. So for you bear market survivalists out there, we got the Mastermind Group tomorrow night, and we have the Cash Flow Club on Thursday. Scout reports on over the weekend.
I like it. I like it, guys. Get in the game. Tackletrading.com. Obviously, just apply your systems, build your edge, and let us know how we can help. There's always going to be a comment in the bottom that we would love to see you guys put something positive in. If you enjoyed our show today, give us a thumbs up, a share, get the word out there for our Team Tackle members. And by the way, if you're on Twitter, go follow Tackle Trading on Twitter. I love what's happening over there with our Team Tackle list for sure.
Yeah, we're being very Tackle's very active on Twitter lately, and they're very active in the clubhouse. So if you need help, you need questions answered, you can go to the clubhouse. You can hit us up on Twitter. And if you're a pro member, if you have any questions and you need help with order entry, Tim, that's what the Traders Lounge is all about. Yeah. So get into the Traders Lounge if you need specific help on specific actionable situations.
Sounds good. All right, guys. Good show today, Matt. Good job, Cody. We will see you guys tomorrow here in the halftime reports.